Welcome back to another explainer. Today, we're zeroing in on something literally every organization deals with, but honestly, very few talk about it until it's way too late. I want you to think of your company's purchase-to-pay cycle, the P2P cycle, as a high-stakes financial vault. Every single day, cash is flowing in and out, and the risks of fraud and costly errors, they are incredibly high. To protect this vault, you can't just, lock the front door and walk away. You need a layered, fortress-style defense. So let's build that fortress together. We'll look at the exact controls, risks, and red flags you absolutely need to secure your cash.
Okay, let's dive into this. Here's our roadmap for today. We'll move systematically, starting with the layered defense strategy. Then we'll cover high-stakes financial risks, identifying critical red flags, and finally, your top priority process improvements.
Let's kick things off with Section 1, the layered defense strategy. Relying on just a single security measure in finance is basically like leaving the vault door cracked open.
Controls absolutely must be layered, and they have to be consistently enforced, because any single gap in your PP cycle can, and trust me, eventually will, be exploited. So it really boils down to this. How do we stop fraud before it happens? How do we actually build a system that naturally repels errors and bad actors? Well, you absolutely need two distinct types of controls to survive. Now, what's really interesting about this side is the clear contrast between the two sides of our defense system. On the left, we've got preventive controls. Think of these as the thick stone walls of your fortress. Their whole job is to block the breach and stop problems from ever happening in the first place. On the right, we have detective controls. These are your guards on patrol. Their job is to catch whatever manages to slip through or climb over those walls, identifying problems after they occur.
Let's look a bit closer at these primary walls, your preventive controls. Notice how they're explicitly designed to stop unauthorized actions dead in their tracks. You've got rules like, hey, no purchase can happen without an approved purchase requisition. You have approved vendor lists, which means only fully vetted suppliers can actually get paid. But look at the bottom of this list, because this is absolutely crucial. A requisitioner cannot approve their own request. That stops self-authorization cold. And any changes to the vendor master file requires strict dual authorization and phone verification. This is what stops an impersonator from just swapping a bank account number and walking away with your cash.
But as we know, prevention alone just isn't enough. Preventive controls can fail, or people find clever workarounds. When the walls fail, these detective controls step in as your guards on patrol. They limit your exposure and enable a rapid response. You've got duplicate checks catching double-entered invoices, AP aging reviews finding stuck payments, and Maverick spend reports flagging rogue purchases that somehow squeeze through without a PO. They catch the anomalies so you can stop the bleeding fast.
Moving right along to Section 2, high-stakes financial risks. We've built our walls, we've posted our guards. Now it's time to look at the specific threats trying to break down our carefully constructed defenses.
5. Just let that terrifying number sink in for a second. Within the entire risk register for the P2P cycle, there are exactly 5 high-rated risks that we have to defend against. These aren't minor accounting errors. These are catastrophic breaches you must defend against at all costs.
Listen carefully to this warning straight from the source. Watch out. All 5 high-rated risks result in direct cash loss. This is real money actively leaving your bank account that you will likely never ever see again. Because the impact is so severe, it reminds us exactly why these risks absolutely require the strongest preventative controls. You can't just manage them with detective controls after the fact. By then, the cash is already gone. So here they are, the 5 direct cash loss invaders. You've got unauthorized spend, which causes massive budget overruns when approvals are bypassed. You've got duplicate payments, where you're literally just paying the exact same bill twice. Then there's fictitious vendor fraud, paying a totally fake party because of weak vendor controls. Add in payment redirection, where someone swaps bank details unverified. And finally, invoice fraud via supplier impersonation. Notice the underlying theme here? Impersonators and weak vendor master controls essentially kick the front door wide open for your money to just walk right out.
Now, we do also have medium-rated risks. And sure, while these might not be direct intentional theft, they still slowly bleed the business. Overpayments happen when a 3-way match gets skipped. Late payment penalties rack up extra costs and totally damage your supplier relationships because invoices just aren't getting processed on time. And missing accruals, they distort your financial reality, making your profit look way higher than it actually is. Left unchecked, these medium priorities absolutely erode the structural integrity of your operation.
Which brings us to Section 3, identifying critical red flags.
When the cycle is actively breaking down, these are the alarm bells you have to raise immediately. You cannot wait for month-end reporting to act on these.
Watch for a massive volume of invoices hitting without a PO, vendor changes happening with zero audit trail. Look out for frequent overrides of the three-way match, or a ballooning, unreconciled AP balance. If you're seeing ad hoc payment runs, or one single person controlling both the setup and the payment, your segregation of duties is totally dead. Finally, watch for large accruals without goods receipt notes or GRN support, and of course, rising supplier complaints. If you see these 8 signs flashing, your system is breaking down under pressure, and your fraud risk is materially elevated right in this exact moment.
Let's move to and see how this builds into Section 4, Top Priority Process Improvements. The alarms are going off, so how do we upgrade the fortress?
So the crucial point is this: you must focus your energy on the actionable upgrades that form the ultimate shield against the most dangerous attacks. These 4 specific upgrades are categorized as high priority for a reason. First, enforce a mandatory purchase order before any purchase, period. Second, implement an automated three-way match in your system. Third, you absolutely must require dual authorization on any vendor master changes. And fourth, run a duplicate check before every single payment run.
This brilliantly illustrates that you don't need infinite resources to stop the worst threats. The source notes that even in a small business with limited resources, these top 4 improvements alone will eliminate the vast majority of your fraud and duplicate payment risk. You don't need an army of accountants or a massive budget. You just need the right focus strategy and the discipline to hold the line.
Once those top 4 primary defenses are firmly in place, then you can look at the medium and low priority improvements. Think of these as your long-term health plans: building AP aging dashboards, tracking Maverick spend, implementing e-invoicing, and conducting annual vendor master audits. These steps improve your overall processing speed. They give you way better cash flow visibility, and they clean up your data quality once the primary 4 defenses are secure.
Which leaves us with a final, pretty provocative thought to take back to your own operation today. Who exactly controls your vendor setups right now, and is your P2P cycle truly protected? Because if one single person can change a bank account number and authorize a payment, your vault door is wide open. Take these layered defenses, patch the gaps, and secure your process. Thank you so much for joining me for this explainer, and I highly encourage you to go audit your own operations this week. You'll be glad you did.